China's central bank has cut interest rates and reduced the amount of reserves that banks are required to hold. They are the latest in a series of moves by the government aimed at stabilizing the markets. CCTV's Jessica Stone explains.
This all started in mid-June. That is when the Shanghai Composite, China's equivalent of the S&P 500 or of the Dow, it soared over 5,100 points. That's a gain of 150% in just 1 year. Then over the next 2.5 weeks, China's central bank cut lending rates. It also revised banking regulations to encourage lending and promised to allow its pension funds to invest in the stock market. China's stock exchanges cut trading fees as well by 1/3, and 28 companies canceled their IPOs. The central bank also injecting billions of dollars into the market. By July 8th, though, mainland stocks, they had melted down up to 3,500 points. The stock market losing 1/3 of its value, an estimated $3.25 trillion, just gone. In response, the government banned selling by major shareholders for 6 months. Companies and employees, they were asked to buy their own company stock, and Chinese police began investigating malicious short selling. Then in mid-August, Beijing adjusting the value of its currency to reflect market rates. The yuan lost 3% of its value in just 2 days. On Friday, August 21st, the Shanghai Composite sank more than 4%. Then investors rushing for the exits. In the very next trading session we saw on Monday, those stocks pledging 8.5%. That was the biggest one-day percentage loss in 8 years on Monday. Beijing following through on its promise to allow pensioners to invest in the stock market. We learned that over the weekend. China's central bank, though, cutting its lending rates and reserve requirements for the second time in 2 months. I want to show you something here. Where does all this turmoil leave us? Well, Chinese investors still ahead. And as you can see from this stock market chart, the Shanghai Composite is still higher than it was a year ago. Look at that far left and you'll see September of last year. The far right, August of this year, we're still up over the year. Back to you.